I keep hearing people talk about fundamental analysis, but I'm not exactly sure what it involves. Can you explain it to me?
Definitely. At its core, fundamental analysis is about understanding a company's financial health and long-term potential. You're looking at things like their earnings, revenue, debt, and growth prospects to decide if a stock is a good investment.
So, it's not about looking at charts and patterns like technical analysis?
Right, that's the difference. With fundamental analysis, you're digging into the company's financials and overall business model. For example, you start with their income statement. This shows their revenue and expenses. You want to see if the company is consistently growing its revenue over time. If they're making more money year after year, that's usually a good sign.
Okay, I can see how that's important. What about their expenses?
Great question. You want to pay attention to how much they're spending. Look at their profit margin. The higher it is, the more efficient they are at turning revenue into profit. But also compare it to competitors in the same industry. If a company has a high margin compared to others, that's a good indicator that they're doing something right.
Got it. What else should I look at?
Next up is the balance sheet. This shows the company's assets, liabilities, and equity. You want to see how much debt they have. A company with too much debt can be risky because it might struggle to pay it off if the economy takes a downturn. The debt-to-equity ratio is a key metric here. It tells you how much debt the company has compared to its equity.
So too much debt is bad, but some debt is okay?
Exactly. Debt isn't always a bad thing, especially if it's used for growth. But you need to make sure the company can handle it. If they can't manage their debt, it could be a red flag. A good rule of thumb is to look for companies with a manageable debt level and a solid history of paying it off.
What about earnings? I keep hearing that term thrown around.
Earnings are crucial. You'll want to look at a company's earnings per share, or EPS. This tells you how much profit the company is making for each outstanding share of stock. A growing EPS is usually a positive sign. But be cautious. Companies can manipulate earnings numbers, so it's important to look at earnings trends over time, not just a single quarter.
Okay, that's starting to make sense. But how do I figure out if the stock is a good price based on all this?
That's where valuation comes in. One of the most common ways to value a stock is the price-to-earnings ratio, or PB ratio. You take the stock's current price and divide it by its earnings per share. A low PE ratio can indicate that a stock is undervalued, but it can also mean the company is struggling. A high PE might mean the stock is overvalued, or that the market has high expectations for future growth.
So, you compare the PE to other companies in the same industry?
Exactly. If a company's PE is lower than the industry average, it might be a good buy. But remember, context matters. Some industries have higher average PB ratios, so don't just base your decision on one number.
I see. And what about dividends? Should I care about those?
Dividends can be important, especially if you're looking for a steady income stream. Companies that pay regular dividends tend to be more stable. But you also want to make sure the company isn't paying out more than they can afford. Look at their dividend payout ratio, the percentage of earnings paid out as dividends. If it's too high, they might not be reinvesting enough back into the business.
Okay, so I need to look at their financial health, growth, debt, and valuation. Is there anything else?
One last thing, company leadership. A good management team can make all the difference. Look at their track record, how long they've been with the company, and how they've handled tough times. Strong leadership can drive growth and steer the company through challenges.
Wow, that's a lot to take in, but it makes sense. So, after I've done all this research, how do I know when to buy?
Well, you don't want to rush it. Once you've found a company that checks out on the fundamentals, look for the right buying opportunity. Don't just jump in because it looks good on paper. Pay attention to market conditions and wait for a price that aligns with your strategy. And remember, never put all your money in one stock.
Got it. I think I'm ready to dive into some research. Thanks for breaking it all down for me.
No problem. Take your time and don't rush. Fundamental analysis takes practice, but it's one of the best ways to make informed decisions in the market.